request that we receive most is, how do you select the stocks to invest in? In other words, which stocks perform best using your StockTrader strategy? And the same for mutual funds. How do you select the correct mutual fund? We're going to show you a little bit about what we do to select the stocks and mutual funds that we choose to invest in. We're going to do that by using the NinjaTrader backtesting facilities. In order to run a backtest, or to see how well a particular strategy would have done on a group of stocks, for example, we will first select File, New, and we're going to open up the Strategy Analyzer here. NinjaTrader will open up a Strategy Analyzer window. And to run or to evaluate the performance of a strategy, we will select first a group of stocks on which to run the strategy. For our purposes, let's run the strategy on the S&P 500. Now what this will do is it will actually run the strategy on the entire set of 500 stocks contained in the S&P 500 group. We'll select the S&P 500 group, and then if we click B, we will run a backtest. And from here, we will select a backtest window comes up, and we'll select the StockTrader strategy to test. Now, we need to change a few settings here because we don't need the minute data, because our strategy only runs on day values. So the end of day value from the Yahoo Financial Service is what we're going to be using. So we'll select the day values, and each bar will represent 1 day. Next, what we will do is select the time frame that we wish the strategy to evaluate. What we're going to do is we're going to begin running or evaluating the strategy from January 1st of 2009 and end on December 31st of 2009. So 1 year's worth of data. At the bottom of this window, we'll simply select OK. From here, the NinjaTrader Strategy Analyzer will go out to the data source, to your data provider, and it will pull out the information from every stock for the whole year. Now, depending upon which stock it is, for example, on this one, ABI, occasionally not all of the information will be there, and it will say error on loading chart data for whatever stock. You just click OK to dismiss it, and it will continue on with the backtest. So if not all of the information is there, that's okay. It will continue to run and continue to execute on the available data. It will just skip over it and take what data it has and then continue running the strategy backtest on the information that is there. You can see that it will take just a couple of minutes to finish running on the data as it gathers it from your data source. And depending upon your internet speed, it may take a few minutes longer, it may take a few minutes less. Just depends upon the data source, how quickly it can give you the data, and how fast your internet connection is. Once you have finished the recording, NinjaTrader will put the results in a table that you can either export into Excel, or you can make a copy of it. If you click on here, everything is sorted according to instrument name. And so if you click on each of these columns, you can sort it according to performance or instrument or gross profit, things like this. I like to sort mine according to accumulated profit. In this case, our biggest winner last year was UIS. Showed a 1,816% return on your investment. We had a total of 4 trades, 75% of them, or 3 of the 4, were successful. And another important number to look at here is maximum drawdown. What that means is that while you were in a trade with the stock, at what point or how much did that stock move against you? We see at one point during one of the trades that UIS moved against us 13.79%. But that is certainly offset by the more than 1,800% improvement or increase in price that we saw from January 1. And it sorts them in descending order. You can see here that we have quite a number of them that gained more than 100% return on your investment. And so what I would do is just simply go through here and look, because there are a number of different things that are important to look at. For example, Ford here. Ford was a big winner for us last year, 286% return on the investment. Now it's important to note, I've been asked several times, oh, Ford was a good stock to trade. It made 286% last year. That's not what this number tells you. This number does not tell you what the stock did if you had bought it at January 1st and sold it on December 31st. What the cumulative performance number tells you is the amount of gain or loss that you would have received last year trading this stock with our system. Obviously, you would have done very well trading Ford with our particular system. But it doesn't tell you what the stock did. In many cases, you can actually achieve higher returns trading a stock with our system than simply buying and holding it. It's because when the stock goes down, our system will say, sell the stock and get out of it while it continues to go down. Now, it may turn around and come back up later, in which case it will generate an additional buy signal to get back into it. But you don't have to take the risk while it's going down of hoping that will eventually come back up. Another important part to look at when selecting stocks is to look at the cumulative profit and the maximum drawdown together. Let's scroll down a little bit here because we had a couple of pretty good examples. Yep. Here we go. Ford and AIG made similar returns. Ford made 286%. AIG made 265%. Both did very well. But with the AIG stock, it did not have a single percentage of drawdown. That's because we had two total trades. Both of them were successful. So it never went against us in a trade. Ford, however, had a 3% drawdown, or 3.9%, almost 4% drawdown. And we had 6 trades, and 3 of the 6, or 50% of them, were winners. If you compare similar stocks that have similar rates of return, like this one, FITB had a 314%, JNY had a 300% return trading it using our system. But the drawdown for JNY was a lot bigger than it was for FITB. As an investor, I would probably pick FITB over JNY if I had to choose, simply because psychologically it's a lot easier to handle a 3.5% drawdown than it is a 9% drawdown on the amount that I have invested. You could certainly have chosen to invest in both of these and done extremely well, obviously. But I'm simply providing another piece of information to use and to pay attention to when you're selecting which stocks to invest in. JNY, 304% return on your investment with a 9% drawdown. Or XL, 331% return on your investment with 0% drawdown. THC, 336% with 0% drawdown. We had 3 trades on THC. 100% of them, or all of them, were successful. And so this is one thing to look at.